Real estate is a powerful tool for building wealth and achieving financial independence. Whether you're looking to generate passive income, secure your retirement, or diversify your portfolio, real estate investing offers many benefits. Here's a step-by-step guide to help you get started and build long-term wealth through property investments. Step 1. Understand why real estate is a smart investment. Real estate is appealing because it provides passive income. Rental properties generate cash flow. Appreciates over time. Properties typically increase in value. Offers tax benefits. Deductions include mortgage interest, property taxes, and depreciation. Builds equity. Paying down a mortgage increases your ownership stake. Understanding these benefits will help you stay motivated as you begin your journey. Step 2. Define your goals. Determine why you want to invest in real estate. Generating consistent rental income. Flipping properties for profit. Securing properties for retirement. Your goals will shape your investment strategy. Step 3. Assess your financial readiness before diving in. Ensure your finances are in order. Credit score. Aim for a score of 620 or higher for better mortgage rates. Savings. Have enough for a down payment, typically 20% for investment properties, and closing costs. Emergency fund. Keep reserves for unexpected repairs or vacancies. Step 4. Educate yourself. Real estate investing involves complex terms and strategies. Market trends. Understand property values, rent prices, and demand. Property types: residential, commercial, multifamily, or vacation rentals. Financing options: mortgages, private lenders, or partnerships. Step 5. Choose the right investment strategy. Buy and hold. Purchase properties and rent them out for steady income. House hacking. Live in one unit of a multifamily property while renting out others. Flipping. Buy undervalued properties, renovate, and sell for a profit. Real estate investment trusts, REITs, invest in real estate without owning physical property. Step 6. Research and analyze the market. Location. Look for areas with job growth, population increases, and amenities. Property value trends. Choose markets with consistent appreciation. Rental demand. Ensure high occupancy rates for rental properties. Step 7. Start small. Begin with a single property to gain experience. Many investors start with a small rental property or duplex before expanding. Step 8. Secure financing. Traditional mortgages, most common for residential properties. FHA loans, ideal for first-time buyers with lower down payments. Private lending, faster but with higher interest rates. Step 9. Build a team. Real estate agents, property managers, contractors, accountants familiar with real estate taxes. Step 10. Manage your properties effectively. Maintain your properties to preserve value and attract tenants. Hire a property manager if you prefer a hands-off approach. Real estate investing is a proven way to build long-term wealth, but it requires research, planning, and patience. By starting small, focusing on solid properties, and scaling gradually, you can create a sustainable portfolio that generates income and grows over time. Your journey to financial independence starts with one property. Take that first step today.